welcome to Davos Direct right here on ET Now. I'm Supriya Shrinate, and we will continue to get you the voices that matter, the opinions that count right here from the beautiful ski resort in Davos here in Switzerland. Now, the 49th edition of the World Economic Forum Summit here in Davos is very interesting. About 2,500 leaders cutting across generations, sectors, countries will be meeting here in very pressing times for humanity, whether it is globalization and the world turning away from that, or geopolitical instability, or even climate change, technological disruptions, and many other factors. And those are going to be some of the most engaging conversations that we will bring to you from Davos right here on this show every evening this week. We will also continue to get you the global opinion makers, the global thought leaders on some of the big changes of our times, the tech disruptions. What will this mean as far as industrial revolution is concerned? Quite aptly, the summit this year is titled Globalization in the Time of Industrial Revolution 4.0. Now, what will tech mean for human beings? What will it mean for jobs? Are some of the things that we will talk about. The global trade tensions rising. What will this mean for emerging economies, particularly India? Are some of the conversations that we will get to you right here on Davos Direct. So stay tuned for very special programming that's coming up. She's an economist par excellence, and as IMF's first woman chief economist, she has broken many more glass ceilings. She's also the second Indian to hold that position after Raghuram Rajan did many years back. He was then the youngest chief economist in the world. Of course, Gita Gopinath caught up with ET Now exclusively for a conversation on the state of the economy as far as the globe is concerned, matters relating to China, Brexit, no-deal scenarios. Is US slowing down? What are some of the headwinds that the global growth really faces? But apart from that, I did ask her very pertinent questions on what will this election year mean for India. What is her assessment of the Modi government's 5 year in office? What have been some of the key achievements and what have been the laggards? For the green and the report card, the GST, IBC and inflation targeting impresses Gita Gopinath. State-sponsored skill-tearing program has been ineffective and she believes it's not going to succeed without the private sector on board. She also warns heavily against looking at quick fixes like farm loan waivers, but supports and backs an income supported scheme. So here she is in conversation with us right here in Davos, Gita Gopinath, IMF's chief economist. The global growth, and you've revised it downwards in your World Economic Outlook. What are some of the challenges, and are you somebody who believes that global growth has peaked in 2018?
Global growth has weakened, and we've revised it down. But to be clear, the revisions are quite modest. It's only 0.2 percentage points for 2019 and 0.1 for 2020. Now, that said, we do see that the risks to a much more sharper downward correction are rising. And some of the big ones are with respect to what the trade tensions and with the financial sector.
You also speak about the US growth, and US for long has been the big engine of global growth. With things slowing down there, and you've kind of red flagged it as well, what will this mean for the world at large, apart from the trade tensions that keep resurfacing?
The US is growing at a very healthy rate. I mean, it is still at a cyclical high. But because we anticipate that the stimulus from the fiscal side will weaken this year and next, it was already in our October forecasts in 2018 that the U.S. economy would slow. I mean, that was expected. I mean, job creation in the U.S. is very high. Consumer confidence is very high. The risks are, again, for the U.S. will be on the trade side about whether there is a greater disruption. And the reason that becomes a major issue for the U.S. Is that we're now seeing that financial sentiment and trade tensions are getting intertwined. And so the financial sentiment aspect of it can make things more disruptive for the U.S.
And you talk about financial sentiment pretty extensively in your report, but one other point of bother that's kind of developing for the world is Brexit. A no-deal scenario is what you're working with. How worse could that be, and what will it mean for the region?
We are actually working with a scenario where the UK continues to be in a free trade area. That's what's in our forecasts. And that the transition is relatively smooth. So in the event if there is a no-deal Brexit and a reversal to WTO rules, then the costs are going to be much larger. At this point, I think the situation can be best described as a large amount of uncertainty on both sides, because while there's a possibility of no-deal Brexit, there's also a possible of reversal of Brexit. In either case, a very high level of uncertainty just weighs negatively on investment, something we've already seen for UK.
Markets and I think economies hate uncertainty. Talking about China before I move to India, China is economy and there's a lot of debate about its slowdown. But at a $14 trillion nominal GDP, isn't 6.6 or 6.5% perhaps the new normal and the world needs to make its peace with it?
This was in our forecast from last October, that the Chinese economy would grow at 6.6% in 2018 and then slow down somewhat in 2019 and 2020. So that is very consistent with the mature stage of the Chinese economy, and that is consistent with China rebalancing away from industries towards services. So that is not the news over here. The news would have been if there was a bigger correction, but we haven't seen that.
And you don't expect that either? Not a crash landing?
The risks does remain, and it depends a lot on what happens with the trade discussions. That is an important factor. But again, at this point, we don't know where that'll end.
And you have underlined it as a risk factor for the global economy as well. Talking about India, your outlook says that India growth is projected to pick up in 2019. What could the tail as well as the headwinds be? Because for very long now, India has been a one-engine economy. Consumption has been the mainstay. Can it continue to throttle growth really?
So India, remains one of the fastest growing large economies of the world. And it is one of the few countries for which we have our estimates actually point to an increase in growth rate for 2019. There are two reasons why we've increased that we expect the growth to go up. We've revised our forecast upwards. One is because of the declining commodity prices, which helps India. And the declining commodity prices also makes it easier for the RBI to have a fairly neutral or accommodative monetary policy. So both of those get factored into a higher forecast for India.
Before I go any further in the fiscal and the monetary space, I think we're also speaking at a time when there's going to be election year in India. I don't want to get into the politics of this, but a government is going to seek a re-election. The opposition will obviously not want that. But in terms of the last 5 years of the Modi government, what would you believe, how would you assess the performance? What have been some of the key achievements according to you and perhaps the laggards?
There are a few accomplishments of this government. The goods and services tax is an important one. The bankruptcy reform is an important one. The setting up of the inflation targeting framework is a very important one. And we've seen an improvement in the ease of doing business. So those were all good measures that were taken by this government.
And what would be some of the concern points? People believe perhaps the agrarian stress or the lack of jobs, not just for this government, but for the economy as large, pose a threat. In an election year, do you believe those become more important?
These are two sectors for which we continue to need to do a better job, both on the agricultural side and on creating jobs. There can't be quick fixes like loan waivers. The skilling programs, the state-sponsored skilling programs have not worked that well, and maybe we need to have it done more with the private sector in terms of firms providing in-house training to workers. That would be a better alternative. On the agricultural side, there is obviously a lot of distress on the farmers, and I would think that a more cash transfer-based approach rather than farm loan waivers or input subsidies would be much better.
If I can ask you a question, and you talk about fiscal correction, and I think I've mentioned that your outlook also talks about that. Fiscal correction is something that everybody is looking out for. If the budget does make room for an agri-relief package, do you believe it's going to be a rational move? Will markets understand that and not treat it as a populist measure?
It is important for India to stay the course on the fiscal side. Fiscal consolidation, if you look at the aggregate deficit for India, which is combining the center and the state, that hasn't improved much in the last 5 years. So that is something that needs to be addressed. Now, this is, of course, a pre-election year, but it is very important that India kind of pays very close attention to the deficit and stays within target.
On that note, thank you very much for speaking to us. Always a pleasure.
Thank you, Supriya.
Sanjiv Bajaj not just runs a profitable business back home, Bajaj Financial Services, but a lot like his father, he's also a very candid speaker. I put forward questions to him not just about global growth and the challenges that it faces, but India, the room for fiscal space. Should there be an agri-relief package? Will markets be forgiving of this, given the fact that it may come across as a populist move? Will markets believe it was a rational thing to do if it is all announced in the budget? According to Sanjiv Bajaj, he says while all of this and more should be done for the farmers, must not forget there's an urban population that also wants its fair share. He, of course, then went on to talk about his insurance business. He speaks about the NBFCs. And the one question that I asked to him very assertively was, how did he manage to escape unscathed in the NBFC crisis, and what are some of the lessons that he can share with the industry? Without mincing his words, he believes that in a structural reform, why should NBFCs be treated differently from the banks, and the RBI should look at infusing more liquidity, but in a more structural way and not as a knee-jerk reaction. Joining me right here is Sanjiv Bajaj, himself becoming a Davos veteran of sorts, aren't you, Sanjiv? But the Davos summit is happening at a time when a lot of people believe that global growth has peaked, and the figures could be revised downwards as far as global growth is concerned. It's happening at a time when there are global uncertainties in terms of trade tension and all of that. How do you believe the global economy is placed, and where is India amidst it all to begin with? Let's set the context first.
So it's great to be here once again, Supriya. I think we are both becoming veterans over here. I don't know if that's good or bad. The focus again this year is once again on what's called the fourth industrial revolutions, right? It's the digital world, it's the interconnected world. And we know today the world is increasingly polarized, but all the more reason that there's a greater need for dialogue. There's a dialogue to try and understand what's common. The dialogue is necessary to try and iron out differences. And I think nothing is more important than to get people to come together and discuss. And that's what Davos is about.
Fair point, Indy. And I think discussion is very important when temperatures are soaring high and the US and China are, engaged in some sort of a big trade war. But the reality also is that globalization in an era of Industrial Revolution 4.0, which is all about digitization, which is all about the digital economy, where tech disruptions are happening, how different will this wave of globalization, hopefully it's going to stay here, be than the last wave when there was a lot of trade that was going on in the world?
I believe that's a developing story. Nobody clearly has the answer to that. On one hand, we've all grown up in a market economy, especially, and in a globalized economy, especially after the Second World War. So nearly 70 years of that. And overall, the world has gained. Unfortunately, it's not gained equally. And I think that's what you're seeing right now. You're seeing the people who've grown significantly less than others to say that you need to carry us with you as well. And I think that's a very important point. What the digital economy does is it allows for very low cost delivery of all kinds of products and services to the last customer, which you couldn't do earlier. It was far too expensive. And I think the digital economy hence makes the whole process far more inclusive. That's the opportunity that's there. And that's why I'm very positive of how this whole story is going to uncover, but we have to wait and watch.
Indeed, we have to. And as far as India is concerned, I think all eyes are on the big election, the big battle of 2019. But as the government steps into the electoral zone, and obviously, there will be a lot of election rhetoric that's going to be in the making. As one of the tallest captains of Indian industry and somebody who, runs a very thriving business, what has been your assessment of this government? In the last 5 years, what would you believe were the big achievements, and where could more work have been done? What were the laggards?
So I'll take the tallest literally, that I can accept. Otherwise, there are much greater captains of industry there. What's important for a country like ours is to have a decisive government, and one that's inclusive as well, and one that can get things done. To that extent, this government has got a number of things done. On the other hand, there's still rhetoric, and there are issues which should have not happened. We need to be inclusive. We live in a kind of country where whether you want to be or not, it has to be an inclusive way to move ahead. I mean, the world is telling us that in different ways. It could be economically inclusive, it could be socially inclusive, it could be religiously. I'm not getting into those levels of detail. I think that's very important. The second is that because we work in a federal structure, we have to have a way for the center and the states to work together. And I'm not here to take names or blame one side or the other, but the question is, if all of it doesn't work together, the country does not progress. Despite all this, I think what we have seen with the insolvency code, the bankruptcy resolution, the way Aadhar has grown, there is a lot of there's a tremendous progress that has happened as well over the last 4 or 5 years. I just think that we want more. We want to go from 7 to 9 to 10% double-digit growth, and that's possible.
They always say in India that ye dil mange more. But Sanjiv, I think one of the things that I want to specifically speak to you about, because you've got exposure to spaces like this, and from a big picture point of view, have agriculture and jobs been the two issues where not just the rest of us, but Indian industry would have wanted a lot more to happen? And do you believe these will be the two big issues of the election as well?
They could be, but let's also not forget that there's a very large urban, young, educated middle class, which is also driving elections. Their aspirations need to be met as well. So it's as much about rural as it is about urban now going forward. So you need to take a look at both these issues.
As somebody who understands numbers and, budgets and fisc and all of that, there is a lot of chatter about how India's fisc could expand, and will that be a good thing or a bad thing is another debate. But, the government so far has been remarkably restrained in going populist. Do you believe they're going to give in to that temptation, given this is an election year and there is some buzz about a agri-relief package? Do you believe the markets will understand, like the finance minister says, that it's a rational and not a populist move? I mean, will that be easy to decipher?
This is always tempting to do, right? And expanding budgetary deficits is something that's happening world over. So we're just in that phase. Election time clearly ends up being a tempting time. And we've always seen in past elections also, there is some amount of expansion that takes place, there's some populist moves that takes place. But I think beyond that, one has to get to some fiscal discipline. And that's a balance. I'm not an economist, and I think nobody can tell you what that balance is. I think that is something that we have to leave the Finance Ministry and RBI through the various fiscal and monetary measures to be able to do that. But what I will say is that going ahead, if India has to come to close to double-digit growth, we need a lot of reform in the financial sector. Today, there's only one type of bank license, whether you call it as SFB or otherwise, they're all universal bank licenses, by and large. 95% of things are common. Now, if somebody says, I want to set up a digital bank, just for 100,000 customers, but a very low cost and only for those that are digitally enabled. But I don't want a PSL responsibility.
That's right, yes.
I think we should be willing to do that. Somebody else says that, I'm going to set up something just in a neighborhood. I mean, cooperative banks and others were something, but they failed. I'm talking now through private sector involvement. And at the same time, I can understand that the RBI is worried on fit and proper. Make it public, have the right set of guidelines, and if somebody doesn't meet that, they don't meet that. But don't stop everybody else.
So don't have a one rule, one size that fits all kind of a thing. But Sanjiv, I think it's a very important point that you talk about. Banks is just one space. But you're somebody who's largely unscathed. And, by the whole NBFC crisis and all of that, there's a lot of debate on, liquidity and things like that. We'll talk in just a bit. But what are the key lessons that you believe you want to share? Because there was a lot of scare as far as NBFCs were concerned. People thought, they're going to let down the markets. People thought the contagion could have spread. But coming from someone who was largely unscathed, and what lessons would you share?
See, there are two different issues. One was there were a bunch of less than NBFCs, I think HFCs, that were mismatched on funds. So they got caught at the wrong end. They had short-term liabilities. They didn't have the assets. Clearly, if you have to grow, you have to match your assets to your liabilities. That's one of the first things you learn, whether you're an NBFC or a bank. So this is something that requires correction, and RBI has taken some steps towards that. The second is the larger issue. Why did all NBFCs, HFCs fall in value by between 20 and 40% in a matter of a few days?
Absolutely.
I think this is systemic risk. Today, the top 10 NBFCs in the country each have AUMs of over 10,000 crore, and they are responsible for 30% of incremental credit going into the system. Consumer growth in this economy, SME growth in this economy has been because of NBFCs. Hence, you need to find a way to ring fence them. It doesn't mean that you're going to create the wrong incentives. But why didn't banks fall? Because everybody knows that a bank license is a secure license under RBI. RBI will open up a window for liquidity. Why don't you do that for the big NBFCs? And you get them to.
So what would your prescription be for the big NBFCs? You mean tighter ALMs? I mean, what would you entail?
I would say tighter ALMs, but at the same time, RBI opens up a liquidity window. It will probably never get used. But it prevents these kind of shocks in the economy. And what you have to keep in mind is, if you look at most of their NBFC stock, most of them have recovered. So somebody lost a lot of money for no reason at all in the middle.
No, absolutely. But Sanjiv, I think on the liquidity front, and I want to touch upon that before I move forward, there was so much of clamor for liquidity, and many people thought, is it fine to open the spigots of lending right now? Is this going to stoke inflation? Inflation is by and large under control. Do you believe this is the time when RBI needs to look at a special window, or do you believe the worst is behind us and we don't need to do that right now?
No. So that situation is past.
Okay.
Yeah. So
But
we don't need.
Reform.
I think they need to think of this more structurally, because what's an NBFC? It's again a license to lend with some limitations.
Yes.
Bank is the same. There's some differences. Why should NBFCs be associated with shadow banking?
True.
What's shadow about it? It's real banking. I think this is where some fundamental thinking and rethinking is required.
You know, as somebody who also has a lot of exposure to the consumer side of the economy, and the one thing that's said about the Indian economy is that it's a one-engine sort of an economy. It grows only on consumption and all of that. What are the trends you are seeing? I mean, is consumption picking up? Is there some discerning spending that's back in the market?
Clearly, we see a pickup. To get more textured information, after me, you should catch Rajiv Jain, who's the MD of Bajaj Finance, and he's here.
Yes.
I'm sure he can tell you a lot more. But we are seeing that improving.
And what about the, there is some amount of debate on high growth in retail lending and, unsecured lending. Could that be leading to another asset bubble? Is that something that concerns you? Are you bothered about that just yet?
Again, when you look at it from a larger perspective, the opportunity is huge. And on average, the consumer is significantly at low leverage. But there could always be pockets, or there could be particular NBFCs who are taking on higher risk. The question is, are they pricing that higher risk? Is that getting priced in the money that is being lent to them? So when you go down to a macro level, this needs to be dealt at the macro issue. But there is a larger opportunity. As you said, with Bajaj Finance, over the last 10 years, we are doing this.
Absolutely.
But because we are focused on the long term, we are focused on building the right risk metrics before we lend. And we keep reviewing that on a continuous basis.
So talking about one risk metric is that you've slowed down the loan against property book. Is that a segment that you're wary of? Is that a segment that you believe poses threat and risk?
We were 2 years ago, so we slowed it down for 2 years. So between 2016 and 18, FY, the book didn't grow. We've just started growing it last year. Or let's say this year. So this financial year, the book has started growing. The LAP book now, the incremental book, sits in our new home loan company, home finance company called Bajaj Housing Finance. We are growing, we are lending month on month. We are being a little cautious just to see the external environment on liquidity. As I said, the worst is behind us, but does it pick up? So we want to be careful over there, not because we are seeing higher risk on the ground, but we just want to make sure the last liquidity event just settles down and passes by.
A quick word on life insurance before I move back to the big picture. How is that business doing? April to December outlook was good. Is that a segment that you think is here to stay in terms of robustness?
So life insurance clearly has evolved into pure protection of life, but far more importantly into both an investment product and a protection product. And that is because outside of the big cities, mutual funds are still low on penetration. Also, a ULIP is a fairly simple product, which gives you a little bit of both. But of course, goes without saying that you have to explain it correctly to the customer. We are very bullish. We've transformed our business about 3 years ago, and from there we are showing steady growth in the overall top line, in the product mix, as well as in the productivity across our different channels. So that's growing well.
life and general insurance, and I think I can't not ask you this question on your business. Any plans to list one of the two JVs?
No, Supriya, because we don't need to at this stage. Now, if you ask me, will you ever list? There's no
Never
reason.
say never.
Yeah, it's never say never, but there has to be a trigger for it. The businesses are profitable. They're very well capitalized. Both Allianz and Bajaj are very confident about the businesses, both the businesses, and both want to stay invested at this point of time. So there's no need to do that in the short term. Let's see thereafter.
So a quick back to elections and back to polity in India as we speak here in Davos. There is this sense of fear when you speak to a lot of investors and Indian industry as well. What if it's a fractured mandate? What if it is a strong, decisive government? Does one necessarily need to fear coalitions? Because coalitions in the past haven't been bad for the reform trajectory, so to say.
Well, you know, a decisive government clearly is a more stable government than a coalition. But as you've said, we've seen coalitions in the past also which have done reasonably well. So let's put it this way. Decisive clearly ahead of a coalition. But whether one or the other, we want one that will stay 5 years and that will keep focusing on what's right moving forward.
But are you confident, and this is the last question really, that irrespective of the next government that forms, whether it's going to be this government that gets voted back or any other coalition that we see in the making, the reform trajectory, so to say, is perhaps going to move in one direction? Are you confident about that?
I very much hope so, because I see the benefits of that. And I think a large number of Indians have seen the benefit of that in the last 4 years.
On a lighter vein, because we're in Davos and it allows us some humor and some insights, all of us are constantly on technology. We're either on our phones or on our iPads and everything. Do you have a digital detox sort of a day that you do in a week or a month?
You know, in my case, I'm hardly ever speaking on my phone. So I drive it the way I'm comfortable. Of course, I'm on message, I'm on email, but I've not felt the need to detox.
Do you still put your phone next to your bed when you sleep, or is it in the other room?
No, so it's next to my bed, but it's off.
That's a wise thing to do. Thank you very much, Sanjiv Bajaj, for speaking to us. It's back to you in the studios. That's Sanjiv Bajaj in conversation with us here at Davos. We kick off proceedings in this beautiful ski resort, the 49th World Economic Forum Summit, with none other than Sanjiv Bajaj. Breather on that note, but we come back with many more conversations. We get to you the men of India's oil and gas sector, IOC, HPCL and GAIL, all in conversation together. And we also get you the voice from the best performing state as far as ease of doing business in India is concerned, Andhra Pradesh. Welcome back. You're watching Davos Direct right here on ET Now. I caught up with the men who make India's oil and gas sector run. Oil is such an important part of our growth story. A benign oil regime is a big tailwind for India, and which is why in conversation with us right here at ET Now were the chairman of GAIL, of IOC and of course HPCL. Mr. Tripathi, Mr. Singh and of course Mr. Surana were in conversation with us. We asked them questions on retail pricing. Why is it that consumers pay more even though prices have cooled off? We also asked them the pertinent question about India's energy security. Why is it that India does not have a shale equivalent to sit on the negotiating table? But as far as India's energy security is concerned, one thing is certain, and I think Mr. Tripathi pretty much alluded to it when he said it is not going to happen overnight. No, we don't have shale-like resources. We are a big consumption market, and that should give us the heft to negotiate. They also did ask the tricky question about Iran, and Sanjiv Singh of IOC very categorically asserted that when Iran oil wanes from our supply, on the supply side there may be no concerns, but prices could be altered. And joining with me are men from India's oil and gas sector, people who matter and people who will ensure India's energy security. Thank you very much. The chairman of GAIL is here, the chairman of IOC is here, and the chairman of HPCL is here, Mr. Surana, Mr. Singh, and of course Mr. Tripathi. So thank you very much for being with us. Even though the government is missing in action at this time, it seems the corporate veterans are all out there.
Well, we are here. It's a part of a government. It's a government in action very much. You see, all three Maharatna companies are here. And we are trying to see that what is new happening in the global economy, what are the new developments in the space of technology, in climate change, and at large in the energy space, what are those new avenues, new businesses people are talking, and this will be a wonderful place to interact with the people who matters in the global economy. and how the global geopolitics is going to affect the economy and the energy space. That will be the area of interest for us.
Okay, let me just take a very important question that a lot of people have in mind, and that is about India's energy security. Mr. Singh, you run IOC, and it is India's largest oil retailer. I think a lot of people would want to know from you is that when you look at the Indian economic landscape, it is incomplete without a conversation on energy security. And not just energy security, but the volatile prices of oil and all of that. I don't think any of us can make a prediction on oil here. If we were, we would be doing our day jobs. But if I were to ask you, oil at about $60 a barrel is seemingly the new normal, and most projections by the IMF and everybody else is based on that. Is oil here to stay at those levels?
It's very difficult. I mean, as you yourself said, it is extremely difficult to predict or extremely difficult to say that whether it will stay at this level. But one thing is very true, that India's energy demands are going to increase because we are growing at a very robust rate. So, and while our commitment towards environment or towards a sustainable, affordable energy is also extremely essential for the country. We had been operating at more than $100 a barrel also. We had been operating at a much lower level also. Definitely we would prefer, because India imports a large quantity of oil, nearly 84-85% of our oil is imported today. So while from the country point of view, we prefer lower prices. Difficult to say, but we don't see the prices going up very high.
Let's hope and pray for that. As a consumer, I believe prices should not go up and remain range bound. But Mr. Surana, I think one of the questions that I would want to ask you is that when prices are volatile and when prices stay up, players like yourselves get questioned. Why is it that oil prices are high when oil was at a lower regime globally? Your retail prices didn't come down substantially. I know there are bigger concerns there, and I know it's the exchequer and all of those things that are concerned. But from a larger point of view, what would you say to people who obviously get angsty and anxious when oil prices go down, but not for the consumer?
No, we need to take care of all our stakeholders, which includes the consumers, which includes our shareholders, which includes the government. Actually, the oil pricing and its correlation to the international prices and the domestic price has been a bit misunderstood phenomena, because there is more complex than what the people normally understand. There is a timing impact, there is a foreign exchange impact, there is a time of processing the oil by the time it gets sold. There are inventory gains, losses, issues are there. What we try to do is to ensure that we are able to pass on the international variation to consumers, at the same time keeping that the consumers is not extremely inconvenienced. And to that extent, we have tried to balance the two to raise the prices to the extent we can and bring it down also. Since 4th October, it has been coming down, except if last 1 week we see when the crude price has been going up.
But I think, Mr. Tripathi, I'll come to you in just a bit because I want to talk about our energy independence. But let me just get down with the consumer angle on the oil prices then. And Mr. Singh, a lot of people will turn around and tell you that the exchequer is being taken into consideration as far as India's oil prices are concerned and not the consumer. Is that an unfair assessment to make?
Many a times...
I mean, why should excise duty not go down? I know it's beyond
anyway, excise duty is not in our control.
Yes,
but
exactly.
Many a times we try to see that what percentage crude prices have fallen and whether the product prices have also fallen in the same ratio or not. There are two things which sometimes we miss. Number one is exchange rate. Again, the recent times when the prices were falling, incidentally, the rupee was also devaluated. Yes. So, which had probably more impact than the change in the oil price. Secondly, the prices which we work out is linked with the global prices of the product and not the crude. Within the product retail prices, there is a fixed component which is substantial, which is close to, I would say close to 50%, which includes the shipping cost, which includes the excise duties and things like that, which are more or less independent of the product price in the global market. So there is no way that it has to fall in the same proportion to the crude. As Mr. Surana was also saying, in the recent past, when the product prices are falling in the international market, the same trend is followed in the domestic market also. Just
give me a minute, because I think I want to make the larger point about India's energy security. If you look at the US, they've been able to, get shale gas to the negotiating table. Every time global prices go up, they can, maneuver shale production. When will we see India perhaps obviously, I mean, it's a long shot at being energy reliant, but there is so much that has been written and said about it. How close or far are we from reliance? And I mean energy reliance.
If you talk about the energy security for India, we need to understand one thing is that it's what are the natural resources available to us. So to what extent we can produce domestically is the first priority, which government is focusing. All our upstream companies, sister companies are focusing on that. But the major impact which we can probably make on the reliance is how, as a large consuming country, we are able to make impact in the international arena. And how the voice of the largest consumer, second largest consumer of the world, is being felt by basically the major producing country like OPEC, Russia and US and all those places. In the recent past, you have seen that government has been making pitch right from the Prime Minister till all the levels. And it is making an impact. And definitely how global economy, how global prices goes, that will have an impact in India because we are still 80% plus import dependence. And we will remain import dependent for a foreseeable future. But the point is, if we are able to make our impact felt, if we are able to see and convince the world and pressurize the world to bring in a balanced price, which we call the reasonable price, I think that will ensure our energy sustainability, energy reliance, because at the end of the day, we'll have to see that what is available in India, that only can be produced. So we'll have to remain on import dependence, but we need to make a bigger pitch and the voice should be heard. The other important thing is for the global economy and largely the oil producing country, they have to realize that if Indian economy continues to grow, the demand continues to grow, will also create demand for them. So it's basically a win-win for both the sides. So that will be the major area of focus for us.
I'll speak to you now about Iran in just a moment, but isn't it strange that when prices have gone up substantially, and even though prices don't come down and crude oil does, our consumption continues to either go up or stay at the same levels? And is that an argument against cutting prices because there are exchequers and there are, health of your companies to be taken care of?
No, earlier it was all normally believed that the oil prices do not have the elasticity to the demand. But because there were fewer options available earlier, but today there are more options available which can be quickly put in place by the consumers. Like earlier, you never had the option of Uber and Ola, etc. So if a person is going in a car, he will not just start going in the bus the next day. But today he can have the comfort of he's going in a car and still can share the pool the taxis. So the consumer behavior is changing, and so we cannot say now that the prices will not have an impact on the demand. At the same time, the higher prices makes a motivation for the alternative sources of energy to get accentuated further. And more the oil prices go, more and more investment goes in those. So the oil prices are important to ensure that oil remains relevant.
Fair point. A quick last question, and this has to be on Iran oil, and I know it's a diplomatic sort of a question, and we've got that buffer from the United States to meet the demand, but how worse off will we be if the Iran oil doesn't come to us?
You see, let me tell you from 2 points.
Because we get a sweeter deal from them than anybody else.
First of all, let's talk about the oil security for India. I mean, we have enough backup plans in case the Iran doesn't flow at all, not a single drop. Then India has enough plans so that as far as the oil supplies are concerned, I mean, that is not disturbed. What impact it will have on the global price? Because today Iran is substantially putting their oil in the global trade, which will definitely, I mean, if the Iran volume goes out, probably there are other players, other producers who will make up of that shortfall. But definitely the price will have, it will arrive at a different equilibrium. So price will definitely, in my opinion, the price will see a change. But as far as the supplies are concerned, whether to the global market or to India, I think that will not be impacted.
All right. On that energy security note, I don't think I should be standing between your lunch and you. But thank you very much, Mr. Tripathi, Mr. Surana, and of course, Mr. Singh, for speaking to us right here in Davos at ET Now. I have said this here in our morning shows, and I'm saying it again. I think Andhra Pradesh and Telangana have decided to bring in their rivalry from India all the way to Davos, which is why you actually see Andhra Pradesh set up a huge cafe meeting point here, and right across the street do you see Telangana. We were in conversation with Mr. Krishna Kishore. He is the chairman of the Ease of Doing Business Board in Andhra Pradesh. Andhra Pradesh has regained the top spot as far as the state's ease of doing business list is concerned. We asked him on things that the state has got right, and we also asked him the tricky decisions that have not been taken, whether it's labor, whether it's land, and some of those concerns. We, of course, also asked him the question that given this is an election year, will the reform trajectory and will the emphasis on ease of doing business continue even if the political regime changes? This has gotten fairly competitive in Davos. You have a cafe right here. In fact, you've taken over the Indian Adda, and there's Telangana right across the street. Have you imported your rivalry of sorts from India here?
Well, I'm Krishna Kishore. I'm CEO of Andhra Pradesh Economic Development Board. This board plans the overall economic growth of the state, including promoting investments in the state. And as far as ease of doing business is concerned, I'm very happy that second year in a row we are #1 in India. And not only the World Bank and DIPP, even the Asian Institute of Competitiveness of National University of Singapore have ranked us #1 in India. Now, as far as competition is concerned, I feel entire India is one. Whether it's Andhra, Telangana, Maharashtra, Gujarat, we are all one. We would like to see the entire country grow.
I don't know if that spirit of camaraderie is there when you're looking at the #1 position in the ease of doing business. But I think all jokes aside, I want to ask you to consistently remain there. Andhra has obviously done a few things right. What are the key lessons that you will share with some of the Indian states that don't fare so well?
Yeah, Andhra Pradesh to begin with had started something called a single desk, where within 21 days all approvals are given online. In fact, over the last 4 years, if you see, more than 98% of the cases we have given approvals within 28 days, 21 days. In fact, we have given in the last 1 year within 7 days all the approvals online. Apart from that, we do a lot of hand-holding. We in the Economic Development Board work very closely with the investors, right from the day they step into the state till they ground the project. We are with them throughout. The Chief Minister himself is hands-on. He holds a monthly meeting. He reviews each and every investment into the state.
Right.
So essentially, it's a very investor-friendly state.
Indeed, it is an investor-friendly state. But I will ask you, are things like labor and land the toughest reforms to carry on? And from a central government's point of view, that reform hasn't been carried. It has been really left to the states to be that last mile.
Now, Andhra Pradesh, we have an excellent labor ecosystem. We believe in win-win. We work closely with the industry to ensure that the labor interests are taken good care of. If you see over the last few years, we never had a strike in the state, #1. And second thing is we are very keen to ensure that the industry takes care of the labor and also complies with all the rules. At the same time, we sensitize the labor to work for the overall progress and growth of the industry.
But it's very difficult to convince labor most times to be equal partners in development. I mean, we've seen that in the central government, we've seen that in the privatization processes and all of that. As you go about doing this, how have you been able to convince labor?
See, first and foremost in Andhra Pradesh, we have a very progressive labor workforce. In fact, most of the manpower is very hardworking. And quite a few of them are willing to learn new skills. And they look forward to newer employment opportunities and avocation. So we work closely with the labor. We ensure they get skilled according to the needs of the industry. And we work with their leaders, with their senior people to make sure that they work closely with the industry so that there will be no industrial strife. At the same time, we work with the managements to ensure that the needs of the labor are properly taken care of. Our Chief Minister strongly believes that we should create win-win models, whether it's industry or labor, whether it's garment industry. We strongly believe in win-win formula.
A lot of people will say that Andhra Pradesh is working very hard to be the IT capital of India and dislodge Bangalore from there.
Yes, Andhra Pradesh has 24% of all IT personnel working in India. In fact, 1/4 of all the IT workforce in US are from India, and 1/4 of them are from Andhra Pradesh, including Satya Nadella, the CEO of Microsoft. In the last 4 years, the government has been working very hard to create a strong IT ecosystem in Andhra Pradesh, particularly Visakhapatnam, Tirupati, Vijayawada, Amaravati. We are working hard to create good ecosystem for IT and bring number of IT industry to Andhra Pradesh.
That's it then. It's a wrap here on Davos Direct for this edition. We'll continue to get you more insightful conversations, more perspective from the men and women who matter, from the voices that count, and the opinions that are shaping our world. Thank you very much for being with us.